what else could you be investing in very physically? If it's not investment grade debt, where else are the banks stepping back from the market because of regulatory reasons or otherwise that you find as new opportunities?
Yeah, again, things that are super long duration, like infrastructure, is a natural place that matches well with our capital. And again, for the banks are going to do a ton of services that we don't do. We care predominantly about the asset and not so much necessarily about controlling the client with all these different services, cash management, treasury, other FX, other things like that.
The banks can have that.
Well, we want to work in partnership with them to make sure that they're getting everything that optimizes.
Are you considering a really big partnership then? I mean, you say partnership a few times today. Would you do a large partnership with a bank?
Again, for us, you've seen SRTs have been kind of the investment du jour for those
synthetic
of you
risk
synthetic, yeah, synthetic. I was making it clear. Synthetic risk transfers, where effectively you buy and you provide first loss insurance in case there's losses, and that releases capital for a bank. We've done very few of those. What we've done is really we've done things like Atlas, where we buy Credit Suisse's securitized business, where it's strategic, it's long-term, it actually services our origination ambition for the next 10, 20 years. It has to be really something that's going to work for both parties. There have been lots of partnerships that have been announced that have been small, narrow, and I don't think fully diligenced with respect to how difficult it is to run those partnerships if there's not full alignment between the two parties. So, of course, we would entertain the appropriate partnerships, but they're very difficult to execute, and they need to be strategic given our size.